University of Maryland economist Peter Morici joins me, along with our very own Ashley Webster here on set with me. All right, Peter, tell me why this is going to happen. I like hearing good news. Fill me in.
Well, all the things are positive for the economy: cutting taxes, deregulation, expanding oil and gas development, and hopefully doing something about China and trade. All those things will increase the demand for what we make here. So businesses will be busier. But at the same time, a lot of the things that Trump wants to do are going to improve the after-tax margins of corporations. So for ordinary folks that are investing in their IRAs and Keos, let's face it, stocks are going to go up. And so if they just invest in the S&P 500 index, they'll be good. At the same time, we're also going to start to get positive interest rates. Money's going to be worth something again at the bank. So the elderly, will actually get some interest on their CDs. They won't have to wait on tables or put produce out at the supermarket to have that retirement income they used to get from their savings.
Yeah, no, that's important. I mean, and let's also not forget, the interest rates moving higher actually incentivizes people to do something actually today as opposed to wait. I mean, if you're that homeowner or potential home buyer sitting on the curb right now saying, I really want to do this, I really want to do this, you're incentivized now to take out a mortgage today and buy the house as opposed to waiting to next year. And
when your mortgage gets a lot more expensive. Yes, and the same for the corporations.
They're incentivized to invest right now.
Peter's right, and I love Peter's enthusiasm because, look, less taxes, less regulation, all the things he listed, plus, spending on infrastructure, I think we all agree that's a good thing.
Provided it's spent well. I mean,
exactly.
I will say, you can't just spend money at random. It has to be well spent.
And I'm enthusiastic as everybody. A lot of this is on faith.
Right.
Donald Trump has said a lot of things I totally agree with. I'm a free market guy. Let's get out of this malaise that we've been in for the last 8 years. But it's got to happen. A lot of this is built on the faith it's going to. I just want to make sure that we can get this stuff through.
Deutsche Bank put out a note, the economist over there, saying that, look, we could actually see the biggest expansion, Peter, that we've seen in history. I mean, better than the 10-year previous expansion, which actually happened, ironically enough, under President Clinton during the whole tech boom. We now have an opportunity to grow in ways that we have not seen. What does that translate to you? I mean, what is it going to mean for the Dow? What is it going to mean? What kind of economic growth are we talking about? 3%? 5%?
Well, I think we could be talking about 4% plus. I mean, Reagan accomplished that, and I don't see why we can't. One of the things that we have going for us is another big burst of technology. This artificial intelligence and robotics is about to really come to fruition. It's not just going to be the ATM and the automatic checkout at the CVS, but rather it's going to really be imaginative things that permit workers to become profoundly more efficient.
Okay, does it still preserve the workers' jobs, though? I mean, that's the flip side of robots, right? I mean, robots are replacing everyone, and then nobody has any money.
We don't want to be Luddites about this. I mean, we've had innovation and productivity growth and replacing jobs since the cotton gin and before. But in the United States, the process of growth and progress requires that we eliminate jobs through machinery, through software and so forth, but we spend the dividends and then create new jobs in the process. The trick, though, is we have to train people better.
Right.
So we need to do a much better job at universities and stop, getting people to borrow $200,000 to be fine arts majors.
I agree, and I think Ashley would too. But, that's all sort of in the distant future. Yes, we should be doing it now, but those people that you're training, they're not going to be there able to do those jobs for another, that many years.
We're going to train.
Well, how many years? It doesn't take that long to train people.
There's a reason Donald Trump won, and that's because those workers that are stuck in transition in places like Michigan, in places like Ohio and Pennsylvania, they're not very happy about it, Peter. So how do you help them protect them?
They didn't have a pro-growth strategy. The difference for the labor market between 2% growth and 4% growth is, 300,000 jobs instead of 150,000 jobs. That is absolutely profound, and that's the way the Reagan recovery was. He grew jobs at twice the pace of Obama, and as a consequence, incomes were rising and people were becoming more prosperous. 2% is almost neutral.
Yeah, he's right. Absolutely.
Do you think that people are feeling this optimism as we look at
They are, absolutely. We're looking at how the do you know how much cash was on the sidelines for so long? It's been pouring in. It's coming out of utilities and telecoms as safe bets and piling into the financials and industrials, because we feel like we're going to get the engine going and moving forward. As for what job in the future, how about robot repair?
There you go. All right. I'll take it. So good to see you guys. And it's always great to hear that kind of optimism. Good things ahead. Fingers crossed. Ashley and Peter, we're going to be right back.